This is the story of one of the most talked about financial crashes in human history. But it turns out, maybe none of it is true. Let's go back to the beginning, way back in 1637, when a single tulip flower bulb would sell for more than a craftsman earned in 10 years. People mortgaged their houses to buy them. Sailors were jailed for eating one by mistake. Fortunes appeared and disappeared in an afternoon. And then, almost overnight, the whole thing collapsed. This is the story of Tulip Mania, the most famous financial bubble in history. And almost everything you think you know about it is wrong. To understand what happened, picture the Dutch Republic in the 1630s, the richest country in the world. The Dutch had invented the modern stock exchange, the modern corporation, and modern futures trading, decades before anyone else. They'd also just survived a brutal plague that killed roughly 1 in 8 people in some cities. It was a crazy time. Money was flowing. Death was close. And tulips were the new luxury obsession that was spreading through the merchant class. Yes, tulips. The flower wasn't even Dutch. It came from the Ottoman Empire. But in Holland's wet, cool climate, tulips thrived. And the most prized varieties were extraordinary. Flames of red on white petals, swirls of purple on yellow. These were patterns that no other flower in Europe could match. One bulb called Semper Augustus became legendary. Only a handful existed, and one was reportedly exchanged for a beautiful Amsterdam canal house. But here's where the story gets strange, or should I say stranger. Because the Dutch weren't just buying tulips, they were buying paper. Tulip bulbs are only in the ground for part of the year, so traders started writing contracts to buy bulbs that hadn't bloomed yet. These contracts could be traded, resold, flipped, and that meant a single bulb could change hands 10 times in a day without anyone ever seeing it. It was one of the first futures markets in history, and it was completely unregulated. By late 1636, the trade had moved out of the formal exchange and into the taverns. Drinking houses across Haarlem became informal trading floors. People who had never owned a flower in their lives were now speculating in tulip contracts. And then, in February 1637, something happened. At a routine auction in Haarlem, a batch of bulbs went up for sale, and for the first time in months, nobody bid. Within days, the entire tulip market collapsed. Contracts that had traded for thousands of guilders were suddenly worth almost nothing. Buyers refused to honor their agreements. Sellers were left holding paper that promised them fortunes that no longer existed. And this is where the famous story begins. The story you've probably heard. Mass bankruptcy. Suicides in the canals. The Dutch economy in ruins. It's a fantastic story. But it's also largely a myth. You see, in 2007, a historian named Anne Goldgar spent years in the Dutch archives looking for the financial wreckage. The bankruptcies, the ruined merchants, the bodies in the canals. She couldn't find them. It turned out that the actual damage from the crash was modest. The truly extreme prices appeared in only a handful of trades among a small circle of wealthy speculators who could absorb the losses. And in reality, the Dutch economy kept booming for another half-century. So where did the legend of the tulip crash come from? Well, it seems that it actually came from pamphlets. You see, in the months after the crash, anonymous Dutch moralists flooded the market with cheap printed dialogues mocking the speculators, drunken fools, and greedy fishwives. In truth, they were satire, closer to political cartoons than journalism, but they sold beautifully. 200 years later, a Scottish journalist named Charles Mackay picked up those pamphlets, mistook them for reporting, and folded them into a book called Extraordinary Popular Delusions and the Madness of Crowds. Weirdly, it's still in print, still quoted by hedge fund managers. And still wrong. It looks like the most famous financial bubble in history was partly invented by people trying to teach us all a lesson. And that's what makes this story so interesting. The myth itself has become more powerful than the facts. For 400 years, every financial crash has been compared to Tulip Mania, the dot-com bubble, the 2008 housing crisis, crypto. If you look, you'll see the same word, the same analogy, always appears: tulips. The story endures because the psychology is real, even if the body count was exaggerated. In simple terms, A new asset appears. Prices rise. Ordinary people start to believe the rise will continue forever. Speculation moves from professionals to amateurs. And then, one day, the bidding simply stops. Every generation thinks the next bubble will be different. Smarter technology, better data, more sophisticated investors. And every generation discovers what the mythical Dutch discovered in an imaginary Haarlem tavern in February 1637, that the bidding always stops eventually. And when it does, the flowers are still just flowers.